Good morning again, everybody. We're back for a special Thursday edition of the news. A couple stories fell through the cracks this week. Just wanted to make sure we did cover those. The first one is the Credit Card Competition Act is back, baby. It's back. So the swipe fee bill picks up 3 Senate co-sponsors. So 3 more senators signed on to the credit card competition routing bill this week. 1 week after the president actually publicly backed it. The bill would require the largest card issuers to enable at least one network besides Visa and MasterCard on every credit card transaction, letting merchants route each transaction over a cheaper option. It's worth noting that 2 of the 3 sponsors are also negotiating a separate crypto market structure bill, which has credit union groups expecting the routing bill to resurface more as an amendment rather than a standalone vote. So the action item, of course, is get with your PSP and watch the news. You know, this has been up and down and back and forth all day long. Get with your payment processor and find out if they're going to be ready. Acquirers carry the implementation costs. Merchants are the intended beneficiaries. So the most affected is going to be the acquirers. So just work with your acquiring partners, your processors, to make sure that they are ready should this actually pass this time. Number 2 is the banks are soon going to be charging for access to consumer bank data. We did cover this a little bit back a couple weeks ago when we first started doing this, but under the current rule, banks must share customer account data with authorized third parties at no charge. Federal regulators are now set to possibly, it's the CFPB, what's left of it, by the way, are set to now rewrite that rule. It's sent to the White House for review, and the most consequential change under consideration would let banks charge for access once the company exceeds a set number of free requests. So banks have argued for years that building and maintaining those data connection carries real ongoing cost. The existing rule is actually already on hold, blocked by federal court while the rewrite proceeds. So the action item is PSPs selling pay by bank or account verification should ask their data provider what a per fee request would do to a cost per transaction and secure pricing notice terms in writing before renewing this fall. The next one is the industry backs the Fed's plan to extend instant payments across border. So cross-border, payments for FedNow. So FedNow settles payments in seconds and runs continuously, as hopefully folks know. But today it can only move money between 2 U.S. institutions. The Fed has proposed letting banks route those payments through an intermediary or a foreign correspondent bank. The comment period is closed with broad support from the major processors, card networks, and industry trade groups. The practical argument is that wires and same-day ACH do not operate on weekends, and the gap is pushing companies towards stable coins for cross-border settlement. The Fed has not announced an implementation timeline, by the way. So the action item here is PSPs and acquirers with cross-border payout volume should confirm whether their sponsor bank intends to originate FedNow payments or remain receive only. Roughly half of participating institutions currently are receive only, which limits their usefulness in these payouts. Some consumer news that I thought was super interesting is credit card balances rose even though household debt actually fell. So total U.S. household debt declined last quarter, only the second drop in a decade. That decline came entirely from mortgages, though, which fell $75 billion. Credit card balances actually rose $21 billion, and auto loans rose $28 billion, all them $150,000 trucks out there. Those are both faster than the 2-year averages. Credit card balances now sit at 11% above where they were 2 years ago, and household saving rate is at the lowest level since 2022. The good news is serious delinquencies improved slightly, but remain above their longer-term normals. So the action item here is merchants building on a recurring schedule should review dunning and retry configuration before the fourth quarter. Rising credit card utilization produces declined payments well before it produces defaults, though. And then the last one we're really going to talk about today is Venmo becomes a payment method inside Google Play. Google added Venmo as a payment method for apps, games, in-app purchases, and subscriptions. Users can now fund those purchases from a Venmo balance, a linked bank account, or even a card. One thing to note is because Venmo draws on the stored balance before falling back on another funding source, the declines on this method have been a little different than what they do with a card on file. So just keep that in mind. So The action item here is merchants billing subscriptions through the Play Store should track this payment method separately for a full billing cycle before assuming its performance matches the cards, which we all know it's not going to. So just a quick couple of things that I just wanted to drop back in here today and talk about, just because we did not cover them yesterday. I'm trying to find the right tone on these news, make it a little more exciting, because the last couple I feel have been a little dry. So I changed the tone on this one, and hopefully it was a little more exciting, a little more engaging. As you all know, if you have any questions or any comments on anything that I talked about, feel free to go ahead and drop the comment in the comments section. Wow, that's there. And I'm happy to engage and have some back and forth if needed. Appreciate you all. Thanks for listening, and we'll see you all next week.